Excellency, the Consul General of Japan, the officers, the members of the association, thank you very much for inviting me and for giving me this opportunity to talk a little bit about our state, who we are, how we got here, and what we want to do going forward. And I hope how we can partner together, since you're already all here based on some interest. Tamil Nadu is, we think, because for whatever reason the government of India has not run its once in a 10-year census. So we don't have accurate population count. But we think today it's between 76 and 80 million people. Because in 2011, the census showed us at 72 million people. Now, some states have very high birth rates and fertility rates. Since we are reaching about middle income status, our birth rates are down quite a bit. Not as low as Japan or Singapore, but low compared to the Indian average. So if I had to take a best case estimate, I would say about 78 million people, about a $320 billion economy, at least when the rupee was about 76, 77, so maybe discounted a bit for being 83. Per capita income about 3,800, close to 4,000 US dollars. Total fertility rate of about 1.6 births per woman. Average education, high school graduate. And about 52% of our college age youth enroll in a degree program, either a 3-year or a 4-year or a professional degree program. This is quite unique. It gets more unique if I give you the human development and social development indicators. Our infant mortality rate is probably half that of the northern states and about 20% lower than the national average. Our medical education and medical facilities are certainly the best in the country. We have 4 doctors for every 1,000 people. The Indian average is slightly over 1,500 people per doctor. I can compare myself or the state of Tamil Nadu to poor states, but that's not a meaningful comparison. It's almost like 2 different economic ecosystems. It's much more meaningful to compare it to a state like Gujarat. Because as you know, in India, there are really only 4 large rich states in India. By GDP, it's Maharashtra, then Tamil Nadu, then depending on which year, probably Gujarat and Karnataka, or Karnataka and Gujarat. The per capita income in Gujarat is slightly higher than that in Tamil Nadu, maybe $100 per capita out of a $3,000 base. But there are stark differences between Gujarat and Tamil Nadu. Gujarat has a few large industries, in refining, in kind of automated processing, in diamond trading, and the Gini coefficient is much, much higher than it is in Tamil Nadu. But there's a more core social construct. In Tamil Nadu, about 85% of the girls at the age of high school are in school. In Gujarat, that number is less than 50%. So actually fundamentally different society, different levels of inclusion, different levels of participation. And so in that sense, we're a very unique state because we're a relatively high income, relatively high education, relatively high human development and social development, relatively equitable, and therefore relatively high consumption state. Because the Gini coefficient is lower, the per capita consumption is much higher in Tamil Nadu than it is in any of the other large rich states, Maharashtra, Karnataka, Gujarat. That creates its own problems, at least historically it's created problems. because we have, let's say, a lot more environmental impact, a lot more garbage collection, a lot more infrastructure stress, because we are also the most urban state. More than 50% of Tamil Nadu now lives in urban areas, and it puts a lot of pressure, particularly in the newly developing urban areas. So we're continuously expanding the city limits to try and bring these exurbs into the city and provide the same uniform quality of service. We didn't get here by accident. If I was to take a long perspective, um, back in 1916, there was a social justice movement started in what was then the Madras Presidency under the British rule, all the way from uh, Kanyakumari in the south till halfway into Orissa on the eastern coast and past Mangalore almost till Goa on the western coast was all run as one presidency, one state, excluding the princely states of Hyderabad and Cochin and Travancore and Arcot and all that. In those days, the British tried multiple sets of reforms to prevent full independence because there was a lot of movement for independence. And so, as a first stage, they tried a set of reforms in the 1880s or 1890s called the Morley Minto reforms. These two names are always the Viceroy of India and the Secretary in the UK government in charge of India, Secretary of State for India or Secretary India. And it didn't quite satisfy the people. So in the late 19 teens, they started a second set of reforms called the Montagu-Chelmsford reforms. And under those, they held elections and created a bicameral legislature. One, all the main departments like revenue, home, and all that were left with the British and run administratively by the government under the Governor General. And then what they thought was not core, which was education, public works, cooperation, all these were given to the Indian elected chamber, which nominated their own government. But what that did was it allowed the Indian elected government to do huge social reform. So in the Madras Presidency, in the first year of the elected government under Dayaki, the two-tier government, women were given the right to vote, women were given the right to stand in elections. Compulsory elementary education, irrespective of caste, for all boys and girls was legislated. And because there was a huge overrepresentation of the only community that really had access to education for hundreds of years, if not thousands of years before that, they brought in what was called the communal GO, which said that government jobs will be allocated in proportion to the population. If this community is 5%, you get 5% of the job. If that is 20, you get 20% of the job, so forth. And it was a consciously short-term, inefficient or suboptimal decision because they wanted to create examples and leaders and what can I say, those who could create coattails for others from their community to come into those jobs. Why I say this is that effectively, since 1921, we are now 101 years later, almost every party that has run the government of Tamil Nadu has adhered to those core values. From 1920 till about 21 till about 37, it was the Justice Party or some variant of it. 37 to 52 with some breaks in between because of the war. There was no election, no government. It was run by some version of the Congress or some spin-off of the Congress. And then from 52 again, after independence, when Madras state was carved out, it was run by some version of the Congress from 52 to 67. And then from 67 till now, some party that calls itself Dravidian, whether it was the DMK or the ADMK, has effectively run the government since then. In that sense, our core values have not changed. Whenever we are in debates in the assembly, it's very rarely about I want to go left and you want to go right. The debates are, have I done more or have you done more, or did you kind of mess this up or did I mess this up? These kinds of relative value, relative credit debates. I would say that is the primary reason. This 100 years of continuity is the primary reason that Tamil Nadu is in this unique position that it is today relative to almost any state in India. Having said that, the last probably 8 or 9 years have been quite difficult, largely driven by political turmoil because the former Chief Minister of Tamil Nadu, Ms. Jayalalitha, was convicted of some corruption cases and went to jail in 2014. And if you ever want to do a case study of what happens when the political leadership becomes a vacuum, Tamil Nadu is a classic case. Tamil Nadu was doing very well as a state, irrespective of whether the DMK or the ADMK was in power. In fact, the core fiscal reform of administration in India is an act called the FRBM Act that was passed in Parliament in 2003. It's a Fiscal Responsibility and Budget Management Act. This act put a lot of constraints on governments. It said that you had to keep the revenue account neutral, you had to keep the fiscal deficit within 3% of GDP or in the state's GSDP. You had to do 2-year forward projections on all your accounts. You had to give every 6 months an interim update to the House, to the Parliament of what was happening with the revenues, etc. It brought a set of disciplinary constraints to the administration, which otherwise, as you know, politicians tend to be profligate. I mean, you just got to get re-elected this time. Most political people don't think 2 elections, 3 elections down. And so this act, both in Delhi and then the union government has a way, though we claim we're a federal country, we're not quite a federal country. So the union government has a way of forcing things onto the states, sometimes for good, sometimes not so good reasons. For the good reason, they said you will not get full funding from the union for certain schemes unless you pass an equivalent act to the FRBM Act. So in 2003, the government of Tamil Nadu passed an act called the FRA, the Financial Responsibility Act, which basically had the same conditions. And that was a remarkable turn of events because at that point, the debt to GDP of Tamil Nadu was about 28%. It was a government run by the ADMK when that act was passed. 3 years later, the DMK came to power. 5 years after that, the ADMK came back to power. But across all governments from 2003 till 2014, the fiscal discipline that act brought reduced the debt to GDP from 28% down to 16%, 17%. Because the debt was going down, the interest payments as a percentage of revenue were going down. So interest payments went down from somewhere like 20-21% down to 11% of revenues. So the act delivered what it was supposed to deliver as long as there was a political leadership in place that actually could run the government. Once the former chief minister went to prison, then she came out and then her health was bad and then, eventually she passed away. But right from 2014, the finances of the state deteriorated quite rapidly. I mean, rapidly relative to where they were, not uncontrollably rapidly. But prior to the onset of the COVID pandemic, Tamil Nadu had a debt to GDP ratio back up at 25-26% and the interest to revenue ratio back up at 18, 19, 20%. This was pre-COVID. So the lack of discipline, the lack of political leadership started harming us in significant ways, starting with a leakage of revenue. At one point, the state used to earn about 10.5% of GSDP as its own revenues, get another 4% as its share of the taxes from the union. There's a formula that gets set every 5 years. The richer you are, the less of your tax money you get back. It's a federal system. So at one point, Tamil Nadu used to be about 7% of the population, about 7% of the economy, and used to get about 7% of the taxes back. That was not taken by the union, the pool that was shared to the states. Now we are about 6% of the population, about 10.5, 11% of the economy, of the national economy, and we get about 4% of the tax pool because we're getting richer and richer relative to the rest of the country. But in any event, this lack of leadership started showing first in leakage, and then no politician can cut spending as fast as revenue drops, if revenue drops that much. So, we're in the election business. And so as the revenue started dropping, some programs or the growth of some programs was cut, but the rest was funded by debt. And so we started being, for the first time, a borrower for revenue deficits, not only for. So between 2003 and 14, broadly the government of Tamil Nadu was revenue neutral. It only borrowed for capital investment. It only borrowed for the fiscal deficit. From 14 till about the pandemic, and then of course accelerating through the pandemic, we became much, much worse. So we're back now. When we took office last May, we're back to about 27% debt to GSDP. Still, by global standards or by national standards, not so bad. And we're back to about 20% or so interest to revenue. The remarkable thing is that once we came, we started kind of fixing things. And at least so far, our experience has been, very positive. In the first year we came, because we had to fulfill a lot of election promises, plus we had the second wave of COVID, plus the third wave of COVID, none of which was planned for. We had a shortage of oxygen, we didn't have enough beds. Altogether, we ended up spending about $3 billion more than the budget had called for in February before we came to office. The interim budget had called for. And yet, once the final account for last year has come, we've actually lowered the revenue deficit and therefore the fiscal deficit by about 16,000 crores, about $2 billion. So we spent $3 billion more, and we still brought the deficit down $2 billion year over year. As a percentage of GSDP, the 2021 fiscal deficit was about 4.61%, and this 21-22 we brought it down to 3.38%. So it's a massive improvement in a very difficult year. The fact that we have not cut any muscle or bone, but only cut waste, is indicated by our growth in revenues this year. This year, we have seen a greater than 50% growth in revenues as the bounce back from COVID gives us results, much more than the Union Government of India has seen. And just to put that in perspective, the Government of India's fiscal deficit last year was almost 7%, more than double our fiscal deficit. So that's where we are now. Where do we want to go? Our Chief Minister has given a very clear indication that he wants us to aim for a 1 trillion economy by 2030. So if we're about 320 billion, really we got to grow about 14 to 15%. Now it's a bit, difficult to set goals in US dollars because I have no control of the exchange rate. But assuming the exchange rate doesn't fly away much more than the delta in inflation, which is normally what Rudy Dornbusch's kind of interest rate parity theory should say, then we need to grow about 14 to 15% in notional terms. That rate we achieved last year in spite of the pandemic, and this we are going to probably exceed this year as we recover. Tamil Nadu has a history of growing even in difficult times. Between 2006 and 2011, the previous time our party was in power, we had a real growth, CAGR, over 5 years of 10.15%, real, so after adjusting for inflation. We don't need to do nearly that much now. If we can hit 8 or 8.5% real growth, I don't see any way that inflation is going to be less than 6.5%. To get there, we need a lot of help, but we got to start with ourselves. So as far as the government of Tamil Nadu is concerned, I would say there's a 3-step priority. The first is to bring our house in order, to reduce the revenue deficit to zero, to come in compliance with the FRA. We're well on our way. Last year, Yeah, we brought it down to slightly under 2% revenue deficit. What had been 3.5. Most of the reduction, no, all of the reduction was only in the revenue deficit. This year we are on track to bring it down substantially again. And though the projection calls for us to only reach revenue neutral in 25, 26, I have committed that we'll get there in 24, 25. We might even get there next year if there's no recession. Right? So the first job is that we should keep our house in order. But we've got to do it in a way that gives us two kind of significant multiplier effects. And the first is on the revenue spending. We got to first make sure the income doesn't leak. We got to change a lot of policies, do a bit more enforcement, do a bit of structural improvements. And once we get those policies right in our revenue spending, and this is true of all democracies, so I'm not saying that it's only unique to Tamil Nadu or in fact to India or to any party, but in all democracies what you find is that the few who have access to the years of government, who are organized, who are able to lobby, these few subvert the kind of actions towards their benefit away from the many. And there's many ways of describing these from, I don't want to get into political trouble, so I won't say exactly. But the principle is very clear. Those who are better organized, in fact, I'll give a generic example. One of our economic advisors, as you know, we appointed a team of 5 economic advisors, 2 or 3 of them with a shared history like me from MIT. One of them is former economic advisor of India and Reserve Bank Governor Raghuram Rajan. And Raghu had written a book before he came to India called Saving Capitalism from the Capitalists, where he makes the point that the basis for capitalism is a level playing field and that everybody should have opportunity to compete equally. But in fact, what happens is that if you have mega winners like the tech companies or like the banks, then they get so rich and so powerful that they can subvert the democratic process through lobbying, through funding, through PACs, and through super agencies. And therefore, they make it harder for the competition and they consolidate their position using the leverage of government. If that's true in America, that's 100 times true in India. The rich are getting richer much, much faster. Not as egalitarian a society like Japan. So, in our revenue spending, at least in this government, my ambition is very clear. We want to spend on the many. We want to get this money to the bottom of the pyramid. We want to have more data so that we know who's getting what. We want to do more direct transfers. We want to avoid the hijacking of these processes by the few, by the associations, by the people who have access to power. And if we do that, we think if we can execute, we can get really good results. I just take a side comment here, or a tangent here. I was in Delhi for some think tank seminar a few weeks ago, and there was a professor from Columbia University, a historian called Adam Tooze, and he gave a lecture about crises and how government should spend out of crises in the old Keynesian kind of approach to economics. And he gave us a quote from Keynes that I had not heard before. And basically, Keynes had said in some context, anything we can actually do, we can afford. Right? And it was a very profound statement. Anything we can actually do, we can afford. Anyway, I went and did some research because it's the first time I'd heard it. And it turns out he was saying that in the depth of the Second World War. It was a 1942 interview with the BBC. And they were asking him, can we afford to do this? And can we get subsidies to get people into jobs and all that? And he made this point, says anything, he says, relative to our forefathers, relative to 50 years ago, relative to pre-industrial revolution, we are so much richer country. And so we shouldn't think short term. We shouldn't think about this year's budget and so forth. We should think that if we can actually achieve the outcome that we intend, then we can afford to do it, because that outcome will definitely give you the multiplier effect and the returns and the growth in revenue and taxes and all these things. And that's profoundly true. In my understanding now, that's profoundly true. If we can actually execute what we intend without getting it hijacked, without rent seeking, without corruption, without all those problems, then certainly money is not the barrier, right? Even for a state like Tamil Nadu, for example, last year we came in well under the borrowing limit. If we were able to bring the fiscal deficit down 1.23% in a difficult year, I have no doubt that we'll do equally well or better this year. So it's no longer a question of money. Now it's a question of actual execution. Can you actually execute your intent and achieve the objective despite all the interferences and barriers in the way? Why that's important is that if we do our job right, we're going to have to greatly increase our capital spending. Because if I went from 3% revenue deficit down to 0% revenue deficit in 3 or 4 years, that means 100% of my borrowing limit is going to be used for capital investment. And at some level, if you're a developing economy, these borrowing limits are not just ceilings on debt, they should also be floors on debt. Why is that? Because if investment drives growth, the basic of concept of economics, that investment drives growth, then surely the cheapest borrowing is by the government relative to private enterprise. The highest likelihood of success, if done right, is the government, because there's nobody trying to rent seek from the government. There's no corruption of the government upon itself. And the kinds of projects that the government will do are high multiplier effect projects. We'll do roads and ports and water systems and hospitals and airports. And these will give high multiplier effects, because we are not as worried about the return directly to us. We'll get it indirectly through companies coming, setting up, through greenfield, brownfield projects, etc. So what's going to happen to us in between 2020-21, where we spent probably $4 or $5 billion in capital expenditure US? If we get our fisc in order, we're going to end up spending closer to 20 billion in 2 years. Now that's a huge shock to the system, right? We don't have any track record of being able to do $20 billion a year of capital expenditures and actually executing it. We don't have the contractors, we don't have the engineering firms, we don't have whatever you call those aggregators, the managers. We don't have any of these capabilities. So in a nice way, it's going to force us to do what we would have prioritized to do if it was within my control anyway, which is to do a lot more private-public partnership and bring in people with the expertise that we simply don't have, the execution expertise that we simply don't have, and to focus on longer-term, higher return projects. For example, earlier today I was in a seminar at the British Consulate on offshore wind. And, if India is going to get to carbon neutral by 2070, then Tamil Nadu, which is the #1 state for renewable energy already today, over 35% renewable, we need to get there by 2050. And if we need to get there by 2050, there's a whole bunch of capital investments we need to do to facilitate that, because evacuating power from offshore wind and all are not cheap or not easy. So I think there's a natural fit that a government like us that is going to end up doing a lot more capital spending without the execution capability now wants partners who will come and not only give us leverage, but also give us the expertise and give us the technology and the kind of result-oriented outcome that often governments are not able to bring by themselves. So in that sense, I would say that this is a very exciting time for us to work with all of you as Japanese companies. In some previous discussions, I've noted that as far back as the late 60s, many in our Dravidian movement used to hold up Japan as an example and say that if within 20 years of the war, which was so devastating, if Japan could become a manufacturing powerhouse and not just a self-reliant country, but do aid to other countries in 20 years, then it speaks of the work ethic, the discipline, the pursuit of perfection, and that should be an example for the rest of us to follow. But here we are, 50 years later, and in some sense our paths have diverged very dramatically. Japan is an aging country with a relatively shrinking workforce, a lot of assets, a lot of need for duration investment, a global perspective, therefore, and a big global investor in many ways, including many large banks that are, global operators or systemically important in the global economy. And India, on the other hand, is the opposite of all that. Large population, inadequate capital, inadequate development. Of course, India is, as the Economist magazine put it, continent masquerading as a country. So actually, both by population size and by disparity between the states in so many dimensions, we are more like a European Union than we are just one country. So in that sense, I would say, as good as the fit between Japan and India may be, the fit between Japan and Tamil Nadu is even better. And that's, I think, indicated by the number of companies that are here relative to in other parts of India. And we certainly value the relationship very much. We are excited to have so many of you here. Back in my earlier days when I was in the banking industry, both in the American industry and then more in the commercial banking industry, I've had some interactions. And I know in Chennai, in my old bank, we set up a desk in those days just to cover the Japanese clients before all the big three had branches in Chennai. But I'm happy to see that all of you are here now. I think this is the right inflection point where we can accelerate the bilateral investment, skilling, talent movement, and trade. And I think with that, on that positive note, I will end my comments and thank you again for the chance to be here. Thank you.